Hi traders, this is the 1st of August 2017. My name is Jameson. Welcome to Behringer Trade. We're looking at a daily vertical bar chart of Under Armour. The ticker I have on here is UAA because this is when I originally did all the work for. I'm not going to go back and do it for UAA. But today we actually dropped down, 10.5%. It's very bearish. But the question is this a terminal shakeout or is this going to continue lower? And there's really no way to tell at the present time. Given the current structure, it is very reasonable to think that this is a terminal shakeout. But to hold on to a position, I think would be careless, anticipating that it's just going to reverse under the assumption that this is a terminal shakeout. Looking at the structure, I would see this as an opportunity to buy lower. In other words, if tomorrow's session holds support and we don't get any follow through lower, or the next few sessions broaden this base of support, then this provides an opportunity for new longs or those that are currently holding positions potentially to add to an existing position here. But you have to have the discipline that if this breaks down, that you stop out. You just cut loose. There's no reason to get tied to it. There's plenty of other good trades out there. But if this is a terminal shakeout, we broaden the space of support, there's a very good chance that we rally away. Now here's a catch. We broke down, very bearish. This is a big gap. We closed at lows, so with increased, and we broke down with increased ease of downward movement under a lot of volumes. Those very bearish conditions. So even if we were to rally and close this gap, in other words, we rally 10%, I still think prices will back up and retest this 1650 area. And that is the point that I'd want to buy. So if we broaden the space of support here, we have a couple sessions that close above $16. You can go long and swing trade that 10% to close that gap, even in the 50-day simple moving average. But I would take profits, and I would anticipate a pullback, and I would look to rebuy that level. And then if we can see that supply is contracting, so if we have 23 million shares here, and on the next pullback we only have 5 million shares, that would give me the confidence knowing that this looks like accumulation and that supply is contracting, that we're back testing what we think is a terminal shakeout. And that would give us a higher probability and a lower risk entry here to participate in some upper price objectives that are here. Additionally, I took off the upper price objectives because I didn't want people to look at a specific number, look at $25 and $29 and just see the risk reward on this, because this is a bearish close. I think we have to have some patience and see if we get any downward follow through, or if we start to see some stabilization and then we trade higher through here. Now, I stopped covering Under Armour after we didn't have any follow through here, right? So if bulls are in control, then demand should consistently exceed supply. We should see more demand here. So as prices broke through this level of resistance, it did so on expanding volume. It's very bullish. And then we broke and we back tested the 50-day simple moving average. I don't really see a lot of supply. I see less supply than selling. But then as we attempted to rally back through this resistance level here, the creek, you can see that there's upper wicks here, there's narrowing price spreads, there's no follow through. That might be a changing character. We may see some redistribution. I don't see a lot of volume, so I just think it was less participation. Nobody was interested in it yet. And if this is under a campaign or being manipulated, the idea is to let it drop, shake out the weak hands, and absorb all that supply. And I think that's what we're going to see here moving forward in the next few days or in the next couple of weeks here. But we do have a breakdown. So we have a last point of support. Prices, demand doesn't overcome supply here, so the changing character. And then the way in which that we rejected it, there wasn't a lot of supply, but again, it's a very bearish daily session here. Breakdown, increase, ease of downward movement, closing at 50 days. And now we consolidate along the 50-day moving average, and it looks like we're rejecting it, and then we break down. So I was asked a few times what I thought of Under Armour. And it just so happened to be as we were washing out, rejecting this 50-day, and I didn't like this trade. This at least suggests that prices were at least going to test 1750. And then we had this nice bullish rally here. I mean, honestly, this is pretty good volume. The only bearish observation is that we have an effort that really wasn't able to regain this level of support here. So support is confirmed as resistance. I wouldn't have looked at this as a big effort, little reward. Not that anybody said that. But again, if demand or if more buyers are present and demand was overcoming supply, I think that we would have traded higher and we would establish this, regain this, or re-achieve this previous level of support that's present. Now, is this redistribution that's here? Looking at volume and the price spreads, again, I don't think we saw aggressive redistribution. I think conditions are that there's not a lot of participation, and then now this is emotional. We had a big breakdown here. So I think that there's pretty good odds that this now is a terminal shakeout. But given the amount of volume, I think that we're going to retest this level here, as I previously said. So that would put us from phase A, which is a stopping action. The stopping action consists of a preliminary support, selling climax, automatic reaction, secondary test. When we have those four principles, the phase A is complete. We have what we need to say that the stopping action is present. Additionally, we can see that we've achieved the bearish objective. So that means that we'd have to build more cause so that we can have a downward effect. So the stopping action is present. And then here we can see that it looks like we have more demand than that of supply. And this, this breakdown here with narrowing price spreads, contracting supply, and then how we rally higher on expanding volume here. This looks like we're seeing some accumulation through here. And then the fact that we rallied through here on expanding demand and we have new highs, that's a nice sign of strength. So I do think that we're seeing some accumulation that's present. I'm doubtful that this is redistribution. I maintain that it's just lack of participation. And I think there's a good probability that this is a terminal shakeout. But it's just too early to tell. We can see that there's, if we look at Under Armour relative to the market and relative to its index, it's a lot of relative weakness that's present. We can see that the sector itself is actually stabilizing and having some increased participation, and the index is actually doing pretty well. I recently said that I think that the clothing and accessories index is going to rally, which may actually have a positive impact on Under Armour where they're currently at. So I don't have a straightforward answer for you. I think this looks like I think this is accumulation. I don't think that this is redistribution, and I think that this may be a terminal shakeout. But I would have a stronger confidence if this was a higher high. If this was a higher high that traded into the 200-day simple moving average, and then it just broke down and we had a retest of this level of support or terminal shakeout through here, I'd have greater confidence. But this is weakness that's presented here, and that's why I'm a little indecisive. So a much longer summary than I'd like, but this is a very difficult chart to look at. I hope some of you find this helpful. We'll certainly follow it a little bit more closely moving forward.